Five, four, three, two, one. Testing. Yeah, I could hear my voice now. Hello, everyone. So this is a trade. I'm waiting for my setup. I'm looking to trade into an inversion fair value gap real quick. So yeah, is a trade started. So I want price to gravitate up into the inversion fair value gap right there. I went short just now. And look at where I placed my stop, just above that high. There's a reason I placed it there. I've done a video where price really went very close to the stop loss and didn't take it out. So this is the reason why look at where I placed my stop loss. So let's watch how price goes now. So I'm trying to, this is pre 10 a.m. Normally I do the 10 a.m. silver bullet. That's the model I used, but this is pre 10 a.m. So you can see how price rallied, fell, but I still want to take more entry. Okay, so I'm watching price closely. Price should be able to go low. If you can rewind the video, if you see where I said the stop take profit, I made it a little bit lower. Why? Sorry, I made it a little bit closer than the lowest objective. Why? Because I just want to aim for the easiest low hanging fruit objective. That's the easiest. Like I don't want to waste so much time, and that's how the model is just like 16 pips, 20 pips, 30. But when you put a lot of risk management and you position well, you could make something. So let's see how price will behave. So you can drop your questions if you just have questions right away, because somebody's very inquisitive. What is this? Drop your questions quick, and I can do my best to answer it. I can even go as far as making a video. I've done it here before for someone, and I can do it again. So I want to take another entry. Right there, another entry. I just entered just there. I told you my stop loss. Look at it at 1.05286. So I want to show you the execution label. You can see I took it off just now. I made it visible over there, just the labeling. You can rewind it and check it out again. So there are a lot of times when I just go short and price just start to rally. I have those videos on this channel. You can check it out. I have, I think, one the 45th minute entry, all those ones. But this time around, price is not just falling heavily as I want it to. It takes time, a lot of time, and this is the pre 10 a.m. silver bullet. So the characteristics are usually slightly different, slightly different. So there are different kind of trading models. So look where I shot, and you can see how price is going in there. I told you why I placed that stop at the beginning. The reason is because it's above an inefficiency, which is this inversion fair value gap. It was above it, so I just placed it above that high. On the 1 minute time frame, you see a CB when I go into the 1 minute time frame. For now, watch how close price went to my stop. You can see that. It stopped out. It stopped out, right? Okay. So that's the hit I took. That's the hit, and there you go. You can see that's how close it is. Like, I've done a video like this. It has happened so much, and I'm getting used to it already. But somebody will be like, I'm fighting. Like, once I put the stop there, I'm like, okay, if I get stopped and then I watch, if the setup is in there, I go in 50% of my initial leverage. But for now, it's still okay by me. So you see right there, there's no way about you'll be stopped out. You'll be stopped out. That's what we call the rule-based stop loss. So you can like the video, subscribe for more. You can also turn on notifications to know when I drop in videos. Feel free to comment your questions, okay? So just hit the subscribe button. You can like the video to give me comments. So you see where it goes right there. I'm gonna get stopped out, right? Let's see. So this video will be like less than 20 minutes. It will be very uncompared to my usual top-down analysis. That used to be hours. So there you go. The price is falling down lower already. But truth be told, as price went in there, it was like, really, would I get stopped out? Because I already, okay, well, no problem if I get stopped out, it's okay. Yes. So I was just trying to laugh over it, but really that's the, like, would I get stopped out now? Like look how close it was. You mind the video and look at that again. So I'm watching this inversion fever look up. I want to see price want to go ahead, like price should want to fall lower. I don't fell, no, fall lower. So I don't like how the price just bounced up just now. I still want it to calm down. This inversion fever look up right there. I want it to get overlapped. So I'm watching. Anything can still happen. Well, if I really should get stopped out, I should have been stopped out at this candles high, and it didn't do that. So I don't think it will be happening again. After all, it's past 9:30 already, and usually after that 9:30, that's when the reversal, retracement, or continuation begins. So I want to see price fall heavily. That's the British pound. I'm watching that. Okay, that's how I weigh, like, okay, do I really go in the right pairs, or am I trading the wrong pairs? I also check the dollar index. Okay, European dollar, I'm still okay here. I think price will still want to gravitate lower. So the consequent encroachment of this candle still, I'm watching it, and this inefficiency, price should want to close below both of them. This way, I love it if price closes this way. And then that means price will really fall lower if it does that. So you can see how price is falling lower now. So we've gone beyond that inversion fair value gap already, and this still consequent increment. So the way it closes in less than 2 minutes, that's very important for me. Look left, there's also a inversion fair value gap right here. That's a BC. I want it to be acting as a resistance. So look at that. Look how close it went. Man, that was some heat. And look how it fell on a larger screen. So that's it for you. You can see that. So it's about just a minute to 9:40, and a lot of you know the benefit, or will I say the importance of 9:45. So this is a bearish order block. I'm looking at that to want to pyramid an entry if I see the opportunity to do that. So I'm watching that closely. Once the opportunity gets presented, I'll pyramid a more, like I'll go short even more, about 200,000 or 100,000 based on it. So I'm just there annotating the inversion fair value gap. That was where I picked the entry at. You can see there. So for anyone who have issues like, okay, you really couldn't see the inversion fair value gap as I was talking about it, this is a way you can actually see it clearly. So I'm comfortable if I didn't get an entry, but this inefficiency is very good. You can see that inefficiency I just showed now. It's a place that there's a potential draw on liquidity. So I'm still focused on seeing if either price runs quickly, then I'll have to take a partial profit. But if it gives an opportunity, I'll actually pyramid a short entry. So this is 9:43. We're yet to be 9:45. So if price just keeps expanding lower, I'll just place a buy limit to take partial profit, and that will be it. But if it still gives me opportunity to go short, I'll even go short more. So this inefficiency is on a daily time frame. On my analysis, if you check the video on my analysis, my top down analysis, this inefficiency is actually a daily premium inefficiency, and I told you price will be trading into there. So I'll drop the link to my daily time frame, my top down analysis. That's before this week open. That's the limit for a partial profit. And if you look up there, there's a green line right here. That green line is actually a bearish order block, the opening price. That order block, I told you about it on Sunday before the market opened. I told you once price reach to that level, I want to see retracement. So I'm literally walking the talk of my top down analysis. I have told you that level, price has traded there. I've waited for my setup, and in with the entry and PDRA that actually resonate well with me, and I've executed. So that's just it. Check the video, you know, I'll drop it in the description. It's in there. That green line is the order block opening price in there, and that was why I'm going short. And that's the reason. Like, it traded to premium Sunday going into Monday, and I'm taking a potential short entry. So I'm watching the level of a 1.05121. It's above this level. Should price want to gravitate there before we go to this low, I'll be taking in a shot right there. I just hit the short button. So right there, 1.05121. So I want to show you the execution so you can look at the labeling. So now I'll be increasing this by a potential amount, because over the years I've realized that taking more partial profit is actually beneficial. Why? Because based on my model, I do just like a scalping, you know, in 60 minutes I'm done, and I don't want to be trying to wait and be sucked into retracement. I just take most of my position when it gives it to me. So this inefficiency on the day time frame, I'm using it now as a draw on liquidity. I took a short entry right here. I told you I'll be looking for the opportunities presented himself. Okay, so the video definitely will be in here. If you like what I'm doing, just give it a thumbs up. Don't forget to subscribe. Okay, comment your thoughts if you have questions or you need clarification about any other thing. So look at that entry, almost perfect, right? That was the high. The high of that candle was 1.05121. So I want to see expansion to the downside. You can see I just increased even my potential partial. Like, I love to take so much position out. So now this is, I think the price engine, which is the algorithm, is engineering liquidity. Like, now it's trying to make this place like a trend line. You can see that it's trying to build capitulation there. I'll be annotating it later, but I'm looking at that as a potential trend line. So it's going to be distorting. Like, it will just stay in there and be wasting time, probably like 10 minutes, but you won't be long, because you can see the video is not as so elaborate, but you'll see price will aggressively rally, like, or fall lower. If I'm buying, it will rally up, but now I'm selling, so it will really decline lower once it's done doing its work damage, because all this is doing now is just distorting, time distortion. So it's making people, okay, now I'll explain what is actually going on there. It's not like, okay, diagonal support resistance. No, This is what is going on. You can see that this is a phantom trend line. Okay, that's what I call a retail diagonal support. Below it is a sell side liquidity right there. That's low at 1.0547. That's a sell side liquidity. I'll notate it real quick. Sell side liquidity. That is it. This is the diagonal retail support I just told you now. So retail diagonal support. Now I want to see price want to eat into that. You can see the price level of that sell side liquidity at 1.05047. Price will want to eat into that. Why? Because people that are trying to, because when I was learning this concept, they was teaching me all this kind of things. I paid them money, like all my money I spent on that. Look at that. This is a Judas swing. Okay, all my money, and they said once it's touching here, be buying. The same higher time frame perspective is applicable to 1 minute time frame. So I'll be buying, and before you know, I'll get stopped out. I didn't know this is price engineering it. This is now inefficiency. I just measured the midpoint. Okay, now this is a Judas swing. What is it doing? It's trapping in breakout traders. Oh yeah, breakout traders, they want to buy long on a breakout. This has been distorting. Everybody can see this. Oh, strong resistance, strong report. They want to break out and trade. Now the people who are going short, once it gyrated up that way, it just took out their stop loss, because they'll play their stop loss just above those highs, these body's highs, these body closures and opening price will go in there, trap them out. So they were right by going short, but the algorithm will not allow them to go in what short, because this is not resistance zone. Your stop loss should be above this inefficiency high, because algorithm seeks what? Inefficiency and liquidity, not support and resistance. Okay, and once it trapped them as a Judas swing, they trapped in long traders. People who buy long are there, their stop loss will be here. Both the support and retail support buyers and those who buy with a breakout, they'll put their stop loss below this low. Watch how price will decimate them. Like really, price is gonna really decimate them. So, but this Judas is nice. It might even do a more pronounced Judas. The more pronounced the Judas, the more faster it will actually go down to me. So right now the time is 11 a.m. Eastern Standard. Sorry, 10 a.m. Eastern Standard Time. So I want to see, there's two things. I should be removing immediately my risks, but I'm not doing that. Why? Price can do two of one thing. It can come into this inefficiency and go down lower. But for now, what I'm actually favoring is actually for price to do what? For price to go down. Now it's 10 a.m. So it might want to go down to create a Judas swing for people that want to be chasing it and to retrace eventually. But now I just want to see it fall lower. You know, I told you I've done a Judas swing, so I'm anticipating some large range candles. Like I want to see some consecutive down close candle that will run into my entry right here. There's an inefficiency there. I just showed you why I placed that limit, and based on the time, since I won't be trailing my stop loss now, you know, I'm actually just increase it by, from it was initially 100,000 shares, now it's 350,000 shares, about just a bit half of this, or yeah, I think a little bit above half of this. Okay, half of this will be 300,025, so a little bit half of, like 50% is coming out in here. And watch how price go in there now. You can see that now. Hello retail support traders, where are you? It must be random, right? Where are you? Oh, let's buy the resistance, let's buy the support. Like you can see that I just explained it to you. Look at that inefficiency. Sometimes I'll be like, oh, why did I place my limit there? I should have placed it lower. But nope, I'm content with enough, because I've seen instances where what, it will actually just go in there, take me just by a peep. It will not even feel me, and it will retrace. So now I'm looking at a level. If price keep going lower, this down close candle, this is sell side below that low. So I'm watching that. I don't need to get this low actually to be profitable. I don't have to get that. So give a thumbs up, you know, subscribe if you want to see something like this over and over. You get notified, turn on the notification button. Once I upload the video, you see it. My top down analysis, you really want to look at that. It's like, that's the basics of everything I'm doing here. So that's the limit I put there, just below that candles low, and look at that, 200,000 is out. Now about 80% plus of my position has been taken in profit. What do I do now? Look at that, risk management. I immediately cut off my risks. I removed what? My risks. And not only did I remove my risk, just okay, trade your stop loss to break even. Nope, I covered my cost and commission. So if it even comes in here, I'm just stopped out in what? In a positive balance. Okay, not negative. So I've secured 80% of my position in profit. Okay, now I have a what? I have a free ride to my destination. Once I do this thing, like you get it, I just relax. Like, man, I don't care what price though. Like I've taken 80%. So look how that diagonal support field. Like look at that. I just make most of it. Like look at how it failed. Like you see that this, I mean here, lamp point here, you can see that it failed. Why? Because that is not what makes price move. So these are the levels I showed you again, so you don't think it's like a market replay or something. These are the levels. See the labeling, the buy limit, and the everything. Look at it. Look at everything. Look at where I sold, and this is it. So just sit still and enjoy, and video will soon be done. A couple of minutes. So you can see our price. I capitalized on the opportunity as price was going lower. Look at that, it retraced so deep. Okay, I actually fastened the video because the retracement took time. So if this inefficiency failed to keep price lower, which is this inversion fee value gap, this other block, if it fails to keep price lower, it's definitely coming to this bearish order block here and to stop me out. And I'm content with enough because that actually does what? It sets the stage up for a second stage redistribution for the 10 a.m. silver bullet, which is my ideal trading model. So it's 10:26 now a.m. Eastern Standard Time, New York time. I have a video in there how to know the exact time to trade the silver bullet. I can drop the, if you want it, you can comment. You need the video, I just drop it in the description. You check it out. And so if it's stopping out, that is just what it's doing because it has disrespected these two up close candle. All this should keep price lower actually, but since it failed, then it's coming to this stop loss. And once it does that, I'm done with the trade, and that's it. Second straight distribution for the 10 a.m. I won't be doing that. If I see an opportunity to do that, I can do that, but you know, I don't want to be pushing and pushing, even though I know price will still keep going down later on. I just won't do that. Okay, I won't just burn myself. I got things to do. I got things to do. So let's see, I can get stopped out right now, and that will be it. Not that it's in profit, so I don't have to be right about the outcome. Like, I do not. Why should I be right about the outcome? 80% is secured and profit. Look, 80%. So why should I be concerned? 80% plus. Let me just say 80%. You know, from 650 to 100,000. Like, that's a nice, like, something is. That's, if you do this in your trading, really, it will help you a lot. Partial profit. You don't have to do a full pull. No, not always. It's not always the best. So remember, you know, subscribe. Hit the subscribe button. Like, you can ask your questions. Okay, and yeah, I've been dropped out, and that's it. So I told you I don't have to be right about the outcome, and I was stopped out what? In a loss? No way. I was stopped out in profit. In profit. That is the labeling of the trade. Look at the details. I just took them out and I showed it for you. So hopefully this helps someone gain some insight. Have a nice day, have a nice time, and a great trading week ahead. So remember to subscribe. Thank you all.